Okay, so yeah, now let's understand. So indicators just indicate the possible price direction in the upcoming time. It means indicator is not what you trade, but indicators are what gives you the confluence to trade. Let's suppose I am looking for a long in from a support zone. If you don't know what is support and resistance zone, then it would be hard for you to understand indicator, but try to understand. I'll tell you in a simple terms what is support and resistance is, so it won't be a hassle for you to understand in future. So I'm marking green. So uh, support is basically a zone from where the market usually bounce, and resistance is a zone from where the market usually go down. Like if the market is rejecting from this price a lot of time, then it's a resistance, and if the price is getting bounced from this area, then it is a support. So that's the thing. So now let's say if I'm looking for longs or short on a support or resistance. Shit, yeah. What, maybe? So yes, so when I'm, can you screenshot your indicator setting, please? Yes, I'll share everything today, and I'm recording it as well. So yes, okay. So what I was saying is, so indicator just indicate you the possible price action or price direction in the upcoming time. It doesn't mean that you start trading indicators. Use indicators, but just as your confidence to enter a trade. Like if you have more confidence, then there is higher chances that your trade will be valid and you will understand it. And I mean to say is there is higher chances of hitting your target on that particular trade. But indicator doesn't mean you just see something bullish on indicator, but the price is showing you nothing, then you enter a position. No, that's the mistake. Always use indicators as your confluence, not the entry or SL model. Okay, now that's what indicator do, and indicators main aim is to provide you just extra confluence. So I'll also write it down. Indicate Indicators main aim confluence. You have to trade the level and the price first. Okay, so this is the rule number one when you're trading, when you're seeing indicators, right? After that, let's try to understand. So yes, I have told you that indicators just indicate the possible price direction, and indicators main aim is to just provide extra confluence. You have to trade the levels and the price first and use indicators as a confluence. Now after that, why when we use indicators in the caution. So whenever we are on a price if you are beginner, it's very good to use indicators, that because it can give you an extra confluence. So let's say the price is on the support, but I am not seeing any relative thing that I can long. Like I cannot just trade and long the support, right? I need a little bit more confluence. So when we don't have much confluence on the chart, we open the indicator and we look for the you can say confluence to start looking for long or short, right? So this is the use of indicator. So again, I'll write it down. Mm, when you don't see much confirmations on the chart, we usually use indicator to open some trades. So that's about the indicators, right? And that's the only rule you need to understand while trading indicator. Just mark these four things and it's easy for you. Like indicator, again saying indicator just indicate the possible price action, and indicators main aim is to just provide you confluence, and you have to trade the level, the price first. You means to say, I'll show you what it is. So and when you don't see much confirmation on the chart, then you usually use indicators for extra confluence. Do you factor a big wick like BTC on the other day? Few wicks either way can ruin a chart. No, just if it depends, bro. Like if you're having a wick something like different mindset, then yes, you cannot even trade week until the wick is not filled, right? But you have to trade, so you can just ignore the wick depending upon how the price is reacting. So I'll show you why I ignore the wick in last, I guess. So in the last time I'll show you why about this one. So yep, so that's the indicator thing. Now we'll move to RSI. Okay, so I'm not removing this. I'll just again let's still download the email. So now let's move to RSI. RSI stands for Relative Strength Index. It simply means, try to understand first this by the words. Relative Strength Index. It means that it is you have to relate something and it show you the index, sorry, strength of the market. So that's how we use RSI. Still okay. Let me make it more bigger. Now, RSI is some stand for Relative Strength Index, and they are basically called oscillators. What is oscillators? So, you have seen if you have seen some charts of traders, you might have seen some lines going on here, right? Something like this on charts, maybe. And this could be RSI, this could be MFI, this could be MACD, but you must have noticed some lines going on below the chart, right? So these all are called basically oscillators, and all they do is just show you some divergences, and then they give you the confidence that you should be looking for long the chart. So the main you can say the main indicators you see at the bottom and like showing like as a line, these all are oscillators, right? Okay, so now uh it's looking like this shit now. Yeah, so yeah, now I can chart better. So again, let me write RSI. So yes, so the thing I was saying is all the things you see on the bottom and are acting like a line, these all are oscillators, and oscillators are the indicators that are lagging means they follow the price and then they predict the movement, and they are called lagging indicators. Like if the price is going up, then it is also forming something like the same at the same point. If you see one more candle, you will see something more here as well. So that's called lagging means following the chart, following the price. So that's called lagging indicator. And all the oscillators indicator uh, are actually at the bottom of the trading view or your chart. So these all are known as oscillators. And try to understand, now we will understand the tool, what is RSI. So when you go to the your trading view application, you can find indicators here. So if you just find relative, let's say just type RSI, you will find it. So here we have relative strength index. So when you okay, I have to remove this first. This is something custom made indicator. So yes, this is called an RSI indicator. Is the lag greater on a higher time frame? Lag? Which kind of lag, bro? Can you say me what kind of lag you are seeing? Now, right now everything is looking good to me. I have just resetted lagging indicator as it does take longer to respond. Yes, the higher the time frame is, it will take the longer to respond. Yep, that's the thing. If it is on monthly chart, it can take months to hit the target. I produce most I produce music and oscillators means something. Yeah, no, here oscillators are the basically these kind of lines. I'll show you something more like something. Okay, sorry, I think it's MFI. Yeah. So if I just say money flow index is also indicator, can you show me the difference between these two? No, these all are oscillators, and this is how they work. So yes, these are oscillators that you see at the bottom of the chart, and they act like boom boom, the line. So if you just zoom it out, you can see a box. Okay, here's the pen. A box at the top, a box at the bottom, and a midline, and there is a line going up and down, and there is a yellow line, so I'll just make it more visible for you. So I'll yellow, let's make it black. So yes, so this is the black line going on. So this is the SMA, means it's a simple moving average. Which time frame is best for RSI? Good question. It's depend upon what you're trading. If you're trading scalp, 15 minute, 30 minute, 1 hour. If you're trading swing, 4 hour, 8 hour, 1 day. That's, hope you understand. Oops, yeah. Scalp, just try to see it 15 minute, 1 hour, or 30 minute. 15 minute, 30 minute, and at 1 hour. So at these time you can just find divergences to enter the trade. So yeah, I'll look at this first. So this is the top, which is known as the 70 level of RSI, and this is known as the 30 level of RSI. You can see the price here, which is showing here. If I go to here, this is 30, this is 70. So, and this is the mid of this, which is 50, I guess. Yep. So this line is 50. Let me remove the drawing again. So this is basically 50, this is the mid of the range. This is 70, which is the top of the range, and this is 30, which is the bottom of the range. And when the price, or when the, you can say this line, not the black one, the purple one, is above the 70, it is known at over, I would say, overbought zone. So yeah, so okay, let me write it, would be easier for you. So these zones are known as overbought zones, and these zones are known as, wait, so these zones are known as oversold zone. Now what it means, what does scalp mean? Scalp means trading on lower time frame, where you can see your stop loss or target hitting in like 1 2 3 hours. There are also some setting people change on RSI. Do we need to? No, you can just make your RSI aesthetic by changing color, but you don't need to change any setting, to be honest. Okay, so yeah, now come at the chart. So what is overbought and oversold zone? Now again, let's try to understand with the name. So overbought means something is overpriced, and oversold means something is, very cheap, which it shouldn't be. So when we are at the overbought zone, price needs some retracement. Like if we are going up, and let's say price is here and we are above the zone, so we look for some kind of retracement to come back inside the zone, this purple zone, which is not even overbought or oversold zone. So this is the zone basically here, and this is called retracement. And when we are in the oversold zone, means the price is too much cheaper, which it shouldn't be. So we expect that the market will do some kind of pullback, something like this here. Like if we are going down, I need some pullback, because let's say this is here and the price is at the zone here, so this is something kind of pullback. So I'll show you with the real example, which will make you more clear about this. So now for this moment, understand, if we are in oversold zone, or let's say overbought zone, we need to see some retracement. So yeah, just make it. So here, do we have something like this on keyboard? No. So retracement, and if we are in oversold zone, we look for some pullbacks. And these both are the same thing, retracement and pullback. But retracement, when we are in a uptrend, like we are going higher, then this is called a retracement. This is a retracement. And when we are in a downtrend, and when the price go lower and again is going up, then this is called a pullback, and the high chances it will again go down. So this is the thing. And after that, so let me know if you are just clear with what is overbought zone and oversold zone, and what is pullback and retracement. So I'll just go next. Yeah, I don't know why my language is lagging today. Like I think I'm just a little bit unhealthy, I don't know. Thank you. I think I literally love it, you are understanding the things. Now the understood made clear. Thank you guys, like thank you, I understand you all. And if you just have doubt, write it down, and if you don't have, let's just move to the next part of RSI. And why I'm focusing most on RSI is because I want you all to just focus mainly on RSI. I'll teach you the rest indicator because you should know about it. But I want you, it's my personal opinion to you, that you should trade RSI just because you don't need bunch of indicators on charts. The less the better. So you just need RSI indicator on your chart, and that's why I'm taking that much time to teach you RSI. So yes, that's the only thing. Okay, you all are clear now, yeah. So now we'll try to understand divergences. You are clear with RSI indicator. So again, I'll just say RSI is basically an oscillator, which say you the price can go higher and lower. So when we're in a overbought zone, like above 70, it means the price will be looking for some shorts. And when we are oversold zone, the RSI says to the chart or to the price, like it should do some pullback and come back inside the range. Now let's try to understand the divergences. RSI just throw me off when I'm trying to use to find it, but I think I'm always looking for the wrong. Yes. So I hope after watching this session your doubt should be cleared. So yeah, I just hope that. And if I can do that, I'm a good teacher. Lol. So yeah, let's try to understand divergences. So first of all, try to understand what is divergence. Together falling with 1920 RI with the lower. So if you are making some indicator based strategy, nah, that's not going to work in long term. Yes, it's profitable, but not always. That's the thing. Okay, so now let's try to understand. Yes, you can make indicators based strategy. A lot of people in the market do, and if you stick to risk management, definitely you're going to become profitable and that as well. Because as I have said, you just need 25% win rate to become profitable. Like if you just have 3 stop loss and 1 profit with 1:3, 1:4, you're profitable. So yeah, now what is divergence? So divergences means difference. So difference between the price. So what is price? Like if you might have that doubt, so you are looking at the chart. So this is the price. The price is going up and down, and this is the real market price, like 28,200, 300, 500, and all that. So this is the price, and this is the indicator. So when there is a difference between the indicator and the price, that's called a divergence. Again, I'll write it. The difference between the price and the indicator. So divergences are basically the difference between the price and the indicator. Like price is saying something else, and the what did you have for lunch? Very good question. We will talk in the end, bro. So difference. So uh again, let's say this is the price and this is the indicator. And if the indicator is telling you something else and the price is telling you something different, then that's called an I think, bro, you just fucked me up. Okay, so now let me get back to the track. Okay, so when there is a when RSI is saying, let's say, go down and the price saying go up, so that's called a divergence. Like that's the thing. And now let's try to understand divergence. So there are different kind of divergences that we see on the charts, but I'll try to teach you one by one. So basically there are mainly two divergences, which is a bullish divergence and a bearish divergence. So the first thing I want to ask you is, are you clear with what is divergence? So basically it's the difference between the price and the indicator. If price is saying something different and the indicator is saying something different, then it's a divergence, right? It is clear. Anyone, one people in the chat, let me know. So yes, now we will understand the main thing, the divergence, what actually it is, you know. Yeah, that is clear. Yeah, so now let's understand Polish divergence first. So we'll understand these two first, then we'll try to understand hidden bullish divergence. So yeah, so bullish divergence and bearish divergence. So first of all, let's talk about bearish divergence. Okay, so bearish divergence. Okay, let's say this is the price and this is the indicator. Indi I N D I A T R. Okay, cool. So this is the price and this is the indicator and this is the bearish divergence. So now let's try to learn it. So price here is like, say, okay, so it's a bearish divergence. So the price is making this something like this, and the RSI at the same time is making something like this. Okay, and what you notice here is the, if you just cast mark the swing of these high, let's do it 2x, and if you see the indicator at the same time, so can you notice some difference at the same at here? Can you see the difference of the price and the indicator, what it is showing? Let me know what it is showing you. Yes, cool. Very good. So yeah, and again, let me elaborate you all. So if you see here, we are making higher high in the price. It's higher high, higher low, and higher high. But on the RSI, it's making lower low and lower high, and then a lower low. So the price simply is saying that on RSI it's looking down and on the price it's looking up. So this is called a bearish divergence. What the fuck? Okay, the mouse writing is not that good still. So this is called a bearish divergence. Now take a look of this at the chart. So I'll show you on the higher time frame first. You will be shocked. Let's say. So let's go. Okay, I don't want to fuck my drawings. I'll show you another chart. 3-day weekly, let's say. Oh my goodness, this shit. Okay. I have very good option for you. I'll just hide it. Okay, how can I hide this? Is here. I'll tell you in the next sessions that how to use indicate trading view as well, because most of the people don't know how much good trading view application is. They just know the basics. So look at this. So this is the swing high and this is the next swing high. I'll mark, give it a 2x. Can you see this? Yes, you can see this. Okay, bro. Thank you for the chart, bro. It will help me to explain. Okay, so yeah. And bearish divergence is made over the price. It might start going to, yes, sir. You're right. And if I mark this here, so if you just notice something here, so you can see the price is going higher on the price, but the RSI is going down. So it is showing you something, as I've told you, it is called a bearish divergence, and that's the thing. And when you see this, after here the price went really bad to the downside. So this is called a bearish divergence. Why we call it is a bearish divergence? Because when there is a bearish divergence form in the market, it is basically show you that for now the price should go lower, which can continue a bearish trend or maybe a little bit downward movement. It depends upon how much strong the RSI is looking. Still, okay. Now again, let's look for some more examples. So yes, we are here. We have one more. So okay, on 3-day it might look better. So on here you can see this. This is the swing high. It is making basically higher high, right? You can see this. It is higher high, but on the RSI, if I just mark the same area, it is making lower low on the highs, right? So again, it is a bearish divergence, and you can see the result after that. So let's say if I just put it down here, now I can see that the price on this is making higher high, and it is making lower lows on the chart. So I will be looking for shorts basically, right? And I expect the price to go lower because the RSI is saying so. Boom, 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 boom. So here you can see that the price started going down and it just fucked up. So yes, so when there is RSI, what you can target is basically this range is previous low or whatever you want, but you should not target the RSI one. You should basically target what the price is saying. So we have support there, so we will definitely book it. So this is how bearish divergence work. I'm understanding what is RSI but not sure how to change it on MEXC. Now there is an application called tradingview.com, so you should use that for doing analysis, not the MEXC one. Okay, again tradingview.com, tradingview. So you just hidden divergence. Yes, I'll tell you that. Yes, I'll try to make it simpler in one picture because once I teach you these shits. Now I hope you all are clear with bearish divergence, which is the most simplest thing. Again, I have told you in the starting that uh you say that confirmation entry. So RSI don't confirm you for entry. That just give you an idea that yes, if you're looking for shorts here, you're at a good track. You have to look for entries based on your price action, like price movement, not the RSI one. You're right. You can use a different what entry models, maybe you know M5 M5 change of character than a fair value gap entry, something like that, or maybe some sweeps, right? So you can have entry models like that. And RSI just told you that yes, you are on a right track. So entry is based support on resistance zone, not RSI. Exactly, man. You are the man. You understand it very well. In which time frame are those divergence shows most? Every time frame. 15, 30, 1 hour, 4 hour, 1 day, 4 day, sorry, 1 day, 3 day, 1 week, 1 month. I need to get a laptop for those charts. Phone is killing my okay, I'll try to make it more lighter. Any value as a beginner with a full pro version of it? No, I personally do not even have the most pro version because I just have the least one. Like after the basic, we have something, so I have just that one. I You don't need to pay that much to trading view applications because you actually don't need 25 indicators on a chart, right? You just need 5. That's enough. Okay, so now okay, now let's try to make it bigger. Now we understand what is bearish divergences. Now understand what is bullish divergence. UWLIFS divergence. So let's make it bigger or more bigger. Let's go. I do not. Okay, yeah. So we have bullish divergence here. So on the bullish divergence, so what? Okay, let's make it more clear. So this is bullish divergence, and boom, and let's make it bearish divergence. So at the same time, you will understand divergence, bearish divergence, DIVE, bullish divergence and bearish divergence. So we have understand that when the price is making higher highs and the indicator is making lower lows, and let's do 2x for you all so it won't hurt your eyes. Still, let's try to make it more bigger. Boom, boom. Yeah. So this is price basically, and now let's try to understand what is bullish divergence. So this was the bearish divergence that we learned. This was the price, price. Let's make it smaller. Price and indicator RSI. Now let's try to understand the bullish divergence. So bullish divergence is basically something. Let's say the price is Okay, yes, going lower, lower low and lower high, because when you're in a downtrend, then you will see some longs, and when you're in an uptrend, then you will see some short when you are trading divergence. And the RSI is just opposite the chart. Just reverse the chart and you will see the same thing. So let's mark the divergence red. Okay, and here as well. So the red line is basically showing the divergence. So when the price is going low, and the RSI is going higher, but you have to look at the bottom when you are seeing bullish divergence, and when you are seeing bearish divergence, you have to look at the top of those charts. You have to remind this. When you are trading bearish divergence, you have to look at the top, and when you are trading bullish divergence, you have to look at the bottom. I'll give you a trick to understand it and remember it. So when you are looking for short or bearish divergence, you will short the top, not the bottom, right? You'll be looking for shorts at higher prices, so you have to mark the highs. And when you are trading bullish divergence, you will be longing the bottom, not the top, right? So you will be looking for lower price, so you will just mark the lows. Is it clear? Okay, so now let me look at the chart. Would using the BOBD be a good strategy? What is BOBD? Bollinger Bands something? Is that Bollinger Bands you're talking about? Bro, I'm a fan of 1 minute time frame. Yeah, you start thinking of 15. I hate them. No, you cannot have very much good win rate on 1 minute, to be honest, with RSI. Yeah, proper scalper. Hey, hey, yes. Bollinger Band are bullshit. Yes, definitely. Yes. So now let me know if you. Hey, what the fuck? Okay, here is the price. Now I'll just take the screenshot of this as well. Remove this. Okay, hello sir. You can just. Oh yeah. Okay. And tell me if you understand this. When you should be looking for short and longs on the RSI and the price, basically. So this is the price and this is RSI. Okay, breakdown. So should you look what price is doing first than RSI, or where on? You should look both at the same time. And also I'll write it down for you. Okay, so bearish, bullish short. So we will look higher, price, typing today higher price short. We will mark high of price and RSI. It should be here. And bullish means long, so we will look lower price to long, so we will mark lows of the price and RSI. Yes, so this is something which will make you remember all this shit. And now let me take the screenshot. Yep, done. Sorry, so it is the bullish row lines at the bottom and bearish lines at the top. Exactly, sir. That's the only thing you need to learn when you're trading the regular bullish and bearish divergence. And one more thing I want to add is bullish, these are the divergence which have the most win rate. And if you go to the hidden bullish divergence and bearish divergence, then it's a very low win rate. Like that's not important, they will work, but there are higher chances these RSI will work. So if it's okay if you don't consider and find those, try to understand. You should always have mind on these two divergences, just master these two. And now I'll show you the example of bullish divergence. Okay, so now I think this chart is looking good. So yes, they should be like, it should not be hurting your eyes on your phone. Hey, so now let me open the chart. a second. So now let's see the lower prices from where the prices bounce. So from here, let's say, yes. So take a look, guys. Take a look. So let me do some changes if you don't mind on RSI. I'll try to make it look aesthetic. So I need RSI. I don't need RSI band based MA. So and I'll just do it 2x and I'll make it black. Okay, it will look good now and you will understand it. So at the lower prices, I'm marking these swing lows, and at the same area you have to. And one more thing to add, guys, you should be looking for the divergence at the same line. Let's say, where's the straight line? Where's the straight line? Yeah. So if I'm marking here, and simply you have to mark it here, so you have to look for the divergence at this range. You should not be looking for here or here. Just look at this range. Okay, so at this area I can see that from the bottom to the top. Okay, so here's the top basically. So it is bullish, like it is in a downtrend, but here it is showing it is bullish. Fuck. Okay, just move it. And here it is bullish, right? So what it is, it was bullish divergence, and you can see the price pump. Yes, exactly like that, right? Now let's see some bullish divergence on lower time frame if we can find it. So we'll see some short or long. So yes, look at this. This is, the price is going down here. Okay, so again the price is making lower low because we are looking for bullish divergence because we are at the lower price, and the RSI is showing you some bullish divergence. So that's how we understand this. And I know that if I'm seeing bullish divergence, I can be looking for longs, maybe after the deviation or something. So that's how you can be looking for longs and short. This is called a bullish divergence. Let's see. Boom, boom. Where is my guy? Okay, I cannot find you, bro. Okay, I think I just removed it. So yeah, that's the thing. And I hope you understand what I mean by regular bullish and bearish divergence. Because now what I'm going to teach you is not that important that this one was. So if you have any doubt, please let me know. And if you don't have any doubt, we'll just move ahead. Because this is the most important thing that you need to learn when you're trading charts, because you can see the accuracy of these divergences. I've showed you everything and you can see it's pretty clear, right? Every time you find some bullish divergence, you can see some pump in the market, right? So let me know if there is any single doubt or it is clear. Just chat on let's come on the chat for a second, because this is the most important thing for today's session. These two one are the most important thing. You don't need any other. Okay, now we are just two guys are typing. Okay, so clear, good, cheers. So let's say I'm just recording it. We are talking, we are waiting. So definitely it's going to be boring if you watch the sessions. I'm a boring guy. Drawing the lines on the divergence spot on, thank you. So do you use Vic or body? Vic. Vic is the answer, bro. Spot on Harsh. Cool. Easy example. Series chart and yeah, okay, let's in this example, trade a chart, you identify as and how much time do you need to wait to work out. It can take 30 days. There is no doubt in that. You do not have to wait. It can take, if you're trading 3 day, definitely it will take at least five next candle at least. So it's 15, 20, 30, 40, 50 days, because that's a huge time frame. Yes, okay, all clear. That's great. You can just print it out and whatever I've showed you. Okay, so that's the thing. Now I'll show you bullish divergence, the simple one, the hidden divergence, and the hidden bearish divergence. So there is something opposite that literally confuse you. But also I want to tell you, like, for the weak and strong part, if it is making, okay, now let me just go back. So I can show you there. Boom, 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 boom. Okay, good. Don't go back. So this is the divergence, and even though if you see something like this, you can see you, let's say you see some double top, double bottom on the price. Okay, let's see. Let's mark this out. Okay, and you see the same thing on the but you are seeing some bullish divergence on here. This is also a bullish divergence, and and if you see something like this, okay, and on the chart at the same time you see something like, so this is, these three all are the bullish divergence. And now what you need to understand here is, so by understanding this you will just cover everything. Instead just then we just need to learn hidden one. So here we can see the price is making lower low and the RSI is making higher high. So it is the most effective one. This one is the most effective one, these two one that I trade. I do not trade these shit. I just trade, and if I just trade RSI, I'll be looking for these two as well. But still these works as well. So let's say the price is making double bottom and the RSI is still high. So also a bullish divergence, and if the both are making double top, then this is also bullish divergence. Same goes with the bearish divergence as well. So let's say, and okay, now same one. Okay, now here we'll try to see. Okay, now let's mark it here, here, and here. So I hope you understand this is just an opposite of the bullish divergence. So these all are also considered as a bullish divergence. But the first one is the most effective one. Yeah, that's the thing. The weaker RSI. Yes, the higher, the lesser the divergence are, the more weaker they are, and the more the divergence. Divergence means the difference between the price and the indicator. So that would be more stronger, and there is high chances they can work. So yes, now let's try to understand hidden. And before understanding hidden bullish and bearish divergence, let me tell you guys that these divergences are not that much effective that the regular one are. So yes, try to keep in mind that if you're seeing a hidden bullish divergence and a regular, the regular will work. There is no doubt that the regular one are more way stronger than the weaker, I mean to say the hidden one. So if you just need quality trades, stick to the regular one, and if you want to do more trading, you can just take a look at the hidden one as well. So now let's try to understand what is hidden one. Okay, so hidden one is pretty simple. Let's say, okay, so I can just do changes here. Okay, now so let me just take a screenshot of this, and now okay, okay, remove this. Okay, yeah, forgive. Yeah, doing here. Now I'll just mark hidden bullish divergence here. HIDD and hidden bullish divergence and hidden bearish divergence. HID. So these are again saying these are not that effective, but it's important to know them. So let's say first try to understand what it is bullish divergence. So let's say the price is making high. So here there is opposite thing. Let's say you have to see something like this. This is the price basically. Again, so this is the price, and this is your RSI. So in hidden bullish divergence, you prioritize the price, not the RSI, because you have seen on the old one, we prioritize the RSI, because if RSI is going higher or lower, then it's a bullish divergence, right? Like if price is making lower low and the RSI is making higher high, so we prioritize RSI, right? And we consider this as a bullish divergence. But when it comes to hidden bullish divergence or bearish divergence, we prioritize the price, not the RSI or any indicator. Okay, so let's say the price is making higher high, okay, and the RSI is making lower low. Okay, so it is known as a hidden bullish divergence. Yeah, and the same thing will happen if we have, you know, the same lows and something like this. This is also hidden bullish divergence. And if we have a double bottom at the both price, it will be a hidden bullish divergence as well. But the weights are less, there is low we will say the less divergence between the price and indicator, there will be low chances it will work. And now the bullish divergence is, again you have to prioritize the price. So let's say price is making lower lows and if it is making higher highs. Okay, yeah, so this is known as a hidden bearish divergences. So this is a hidden bearish divergences. Now the cost, I'll make it again simple. So for regular, okay, let me see, fuck you. Okay, for regular and for hidden. Okay. Now for regular, we, okay, what's the spelling? Right, something like this, I don't know. So we prioritize RSI, and for hidden, so this, I'm sorry for the spelling, but yes, uh this is the thing that you need to understand all about RSI. Do you understand what the hidden bullish divergence and bearish divergence work? So let me know in the chat, guys. What are you doing? Hello. And I know a lot of people here are familiar with RSI, but I just want to tell you the theory behind it and the practicals behind this. So the in future, if you trade, you do not have any doubts. Clear on this. Thanks, sir. Okay, thank you, Morpheus, for your response. That you're clear. That's amazing. So what it makes hidden? That's very. My friend used to ask me if it is hidden, how we can see it. So yes, I cannot answer that. I'm still looking for the answer. My one of my friends who is trading with me used to ask me like, bro, if it is a hidden divergence, how can we see it, bro? Yes, that penny has finally dropped. Maybe not seeing some. Yeah, I got the but. Would you advise the stay away from hidden? Yes, I would say stay away from hiddens. It's better you just trade the regular one, just this one. This is the most effective divergence, nothing else. He's a wise friend. Yeah, all clear. Great. Like I don't know, but my way of speaking is not that good today. I am just understanding this, but comparing the last session. But yes, sorry for that. I think regular makes more sense and more reliable, perhaps. Definitely, that's the thing. The because Harsh, you are doing great. Thank you, man. US sports was spending like a drop. Yeah. Okay, so that's all about RSI. So again, oh bro, okay, thank you. Okay, now 4PL reacted. Okay, good. So now let's again, I will just repeat and confirm RSI. RSI is a lagging indicator. We don't use it for Taking trades, we use it as a confluence while taking trades. RSI, there are four types basically. Bullish divergence, bearish divergence, which is our regular one, and then we have hidden bullish divergence and hidden bearish divergence. So when we are on regular divergence, we prioritize price, sorry, RSI on regular one. Let's say if the price is going lower and the RSI is going higher, we prioritize the RSI and we look for longs. But at the same time, if there is hidden divergence, we prioritize the price there. Let's say if price is making higher high and the RSI is making lower low, we prioritize the price there and we started looking for longs. So that's the thing. And I'll react also on the haha emoji. I do not understand what you mean, because still I'll react. Okay, repeating, oh, something I literally don't understand. Okay, so never mind. So guys, this was all about RSI. RSI was literally a big chapter. Now I'll complete all this fucking indicators in 2 seconds. There is nothing hard on rest of that. Okay. Mm-mm-mm-mm. Okay, so yeah. Now the next indicator I have set RSI correctly. Okay, yes, RSI is correct, and I can see nothing, no divergences at this moment on your chart. Now let's understand MACD. What is MACD? Here's the full form: moving average convergence divergence. Okay, now let's just remove this for a bit. So guys, you want me to make you understand in a very simple terms. If you want, I'll just give you two words and you will understand what MACD is. Like, don't overcomplicate this. No, MACD right now. What did you? Yes, I'll tell you what the difference between stock RSI and RSI. It's totally different. Our stock RSI works as the MACD, but the RSI work as usual it works. Is 80-25 better than 30-70? 55-200 are the better one if you're talking about EMAs. And in EMAs, I think it's better you go to, because EMA don't work mainly, in my opinion. Yeah, they don't work what you're trading there. RSI 30-70, keep it simple. Don't do any professional changes. 30-70 is simple, because at least you are looking for divergence. You are not looking for oversold and overbought zones. We will actually looking for longs and short after seeing the divergence, right? We just don't start looking for short when we are in a oversold zone, because you will be fucked up and it will be liquidated if you do this. So always remind, the numbers 80-50 don't matter. Some people don't even have this. Only the divergence matter. Now I'll make it very simple MACD for you. So I don't want to overcomplicate it. I'll just tell you in simple. MACD rule is follow the blue. Okay, so I'll have to make follow the blue means the blue line on the MACD. Now if just notice at the chart, okay, and we will understand it everything about the MACD. Okay, here we go. So look at the blue and orange one line. Okay, okay, keep typing and until the time I'll teach. So if you look at here, the orange flipped, the blue flipped the orange. Now it's bullish. You can see the price can go higher. Simple. Now let's look at the top. So you can see blue broke down the orange. We see some downward movement. Okay, again let's see blue one. So you just need to wait for the flip of the zone. Okay, so when the cross of the zone basically, so when the blue cross the orange, the trend is changed. That's what MACD indicates. So when you see this, or blue again cross the orange, we see a very good dump. And again we see the blue flipped or cross the orange, you see a pump. Again you see or blue cross the orange, you see a dump. Again you see the blue again cross the orange, you see a pump. Again this it's very simple. Again, if you see here, the blue cross the orange, you see a dump. Again, you see the blue flip the orange, cross the orange, and you see a dump. And now it's flipping this, and you are seeing a pump. That's clear, right? On RSI, any indicator can't be used as any oscillator indicator that are at the bottom of the chart can't be used as a entry. It will be only confluence. Bro, why you don't trade on RSI? You will also yes, that I'll tell you the true things, to be honest. You okay? So you all are clear with MACD. Follow the blue, blue cross the orange, and you shift your trend. That's what MACD shows you. That's very simple on MACD. There is nothing to know about. There is nothing more to know about MACD. That's a very important thing. And the green boxes are just showing you the volume strength. It's increasing, it's decreasing, it's increasing, it's decreasing, it's increasing, it's decreasing, it's increasing, it's decreasing. There, and they just move like this. So yeah, there is nothing more to know about this. So guys, let me know in the chat if you understand MACD. If you don't understand, I'll just repeat it again. Basically, it is following the blue line. So whenever the blue flip the orange, in upside downside, you will just change the trend from there. So that's the thing. It work on each and every time frame. So there's nothing to know about it. And it's a very good indicator to also understand that will we start looking for longs and short. Okay, so I need a little more members to tell me if does no, not much. If it is showing, that's not much. The for divergences, RSI is the best one. MACD basically follow the blue when it's cross the EMA, which is basically the when it cross the orange. Just you have to it's simple, like it's pretty simple. If you just have to draw the orange and just wait for the blue to flip, and then you can just understand you should start looking for longs or short, right? MACD is simplest, right? Isn't it? MACD is the simplest one. Yes, that's the thing, bro. You have to trade support and resistance at the end. These are just a confluence. Each and every indicator are the confluence. Okay. Can I use MACD to trade then, or is it not? You can trade definitely. It's a very good indicator, but you cannot take entries on basis of just MACD. You have to look for a little bit more confluence, and you have to trade price because you cannot trade the MACD or indicator. You can trade the price, and if you're seeing some bullishness on MACD, you can start looking for longs on your price. You can see it, there are a lot of entries model, right? So yeah, now MACD is pretty clear. The box or the strength of volume, and you have to follow the blue to know what to do. That's very simple. Now let's try to understand the next indicator, which is stock RSI and stochastic RSI basically. And you will be amazed that I'll also make you understand in one simple thing. What? Okay, so my easy way to remember now is don't trade bottom of the chart indicator. No, that's just confluence. You just need to trade them, but they will give you a very better confluence. Yeah. And any other trader or course seller won't tell you this, that they are just confluence. Yes, not for trade, but you can trade. Now, what if I okay, so what if I make you a stochastic RSI, make you clear in just three words, and it's done. Okay, let me show you this. I'll write something and it will be clear. Stochastic RSI. Done. It's all about stochastic RSI. Follow the blue, and this is not that much effective indicator, but yeah, that's what stochastic RSI used to tell you. Follow the blue means once the blue flip the orange, you could start looking for longs. Once the orange flip the once the blue flip the orange, you started looking for shorts. Again, once the blue started flip the orange, you can start looking for long, short. and short, long, short, long. A similar thing like MACD. You Most of the people don't trade this, to be honest, and also follow the blue. That's it. Easy. Stochastic RSI is clear, bro. Everyone, look at the monthly. On what, bro? Like it's just 1 month. Great chart. Hey, do not scare me, bro. On the higher time rate, it's not necessary. It will work, but if you see here and here, it shows it. If you see here and here, it shows it. Yes, it's good, bro. I'm expecting this. I'm expecting 20k, no doubt. There's nothing to fear about it. Yeah, it's showing that some bearishness, and yes, it could happen. Can this value be used in MXC or just trading? It's better you analyze charts on TradingView. You can just download the TradingView application on your phone, on your desktop, or you just use the browser one. That's very simple. Easiest one here. Yes, MACD and stochastic RSI is simple. Follow the blue. And I'm not lying. I don't want to explain it. Oh, you have to do this. No, that's what, bro. 1 month chart, really? If I put a trade, it will, bro. And why you need to do swing and pay a lot of fees? Nah, don't do swing trading until you do not look at the chart for months. No, swing trading is should be, because you will fucked up by emotions, because price will pump and dump a lot of time. It's free. First time I use it today. Very easy to use. Yeah, definitely. Trading is basically free, and I just use its premium for the alarms, which you can even set on MEXC. I'm just giving up my free money to ME with TradingView, because you can see there's no indicators on my chart. So yeah. So that's what all about stochastic RSI, guys. What's the next topic we need to discuss? EM and MA. Okay, cool. So I need to take like 1 minute break, if you don't mind. Let's just talk different things.